Most people watching this video know my stance on the market. I've been bearish for quite a while and this week wasn't too great for the altcoins either. But what is interesting is that it's not just this week, it's also this month, which hadn't been too great, and even this year. The majority of altcoins lost this year, despite Bitcoin having appreciated more than 30%. Isn't it fascinating that we've got so many losers, some of them even more than 80% in the last year, when overall we were rather in a bull market? Now in this video we're going to look at the macro picture again, because in the end all of those prices are influenced by Bitcoin, and the question is always, where is the current risk to reward? If currently the risk isn't too high relative to the potential upside, it might make sense to take some of that risk. Otherwise, it might make sense to rather stay away. Now let's have a look at the data most people are not considering. For example, have a look at this chart here. This shows Bitcoin supply over time. So the circulating supply is in orange, and that's very much predictable because there is the mining that issues the BTC, and that newly issued supply gets cut in half every 4 years, right? So the supply expansion is slowing down. Now what's interesting is when we look at the free float, so that's the line in green, that there was actually zero expansion since July of 2017. So for the last 8 years roughly, there was not more floating Bitcoin, even though the overall supply went up, simply because a lot of the supply is now held by long-term holders. The price discovery happens among the short-term holders, and that's what's creating those rallies and those bear markets. But the reason why Bitcoin appreciates over time is because there's more and more fiat currency printing, and also because there's more and more adoption by the long-term holders. That's why those bottoms and those tops tend to be higher over time. Now when we take away those very long-term views and we just have a look at the hot, warm and short-term holder supply, we can see how this is generating those price moves. In other words, when there's a lot of short-term interest in BTC, when a lot of short-term speculators buy BTC, that is when the price appreciates very fast, when there's an acceleration of a bull market. When the short-term holders tend to sell, when they exit the market, that's when the Bitcoin price can go down quite drastically, by more than 80% in 2018 and by more than 70% in 2022. It's the short-term holders that create this price fluctuation. Currently, the short-term holders tend to rather still accumulate. Not as quickly anymore compared to Q3 of 2024, but it's still going up slightly. And so Bitcoin is simply just a transfer mechanism from the people that are very much in rush, that just short-term speculate, to the people that are long-term investors. The longer your time horizon with Bitcoin is, the more likely you are to be in the profit. So those lines directly mirror one another, right? When the short-term holder supply goes up, when there is almost 50% of all of Bitcoin in the short-term holders' hands, that's when the long-term holder supply is going down. So it simply just transfers from long-term holders to short-term holders. The market is heating up. And the reason why then the price at some point turns around is because the short-term holders want to see short-term gains. If there's no more price expansion in a very brief period of time, then those short-term holders get very nervous and they exit very quickly. The volatility doesn't really bother the long-term holders that much, but when there's a lot of supply in the short-term holders' hands, just a little bit of a price wick can create an entire bear market. The reason why short-term speculative money enters into a market is for a continued rally. When the rally does not continue or just halts for a while, right, when the market isn't expanding as quickly, then all of those tourists exit very quickly, and then that exiting causes the bear market. In other words, a rally is healthy when a lot of supply is in the long-term holders' hands. A rally is not healthy when a lot of the supply is in the short-term holders' hands. The more supply is in the hands of short-term holders, the worse it is. Currently, again, it's rising, but it's not yet at the extreme levels that we saw in 2018 or in 2021. And so those are the two major forces of Bitcoin, right? We've got the long-term holders that adopt Bitcoin, that dollar cost average into Bitcoin, that just keep it on the sides, and that's what creates those higher highs over time. And then there is the short-term money that creates those massive ups and downs. And so what we see over here is the number of Bitcoin that's in wallets that have held Bitcoin for at least 4 years. And this continues to grow very nicely over time. And it seems like this is not stopping anytime soon. And again, this is what fuels the long-term Bitcoin price growth. The reason why we see those massive crashes every now and then is because of the short-term tourists. Let's add that supply to the chart and just have a look at how this suddenly adds a lot of volatility in the holding. With the supply of the medium-term holders going down and with a lot of supply being held by short-term holders, the rallies get very, very unstable and we're just waiting for the bear market to occur. Let's take away the long-term holders, right? Let's just look at the supply that's held between 3 years to 6 months. And again, this is what creates all of the price volatility. We want to sell when this is low. We want to buy when this is high. Currently, that's not necessarily very high. I am personally rather bearish right now. I am not too exposed to the market. I'm even betting on falling prices. If it's not your first time on this channel, you know that I'm especially a fan of betting on falling prices of altcoins. Because again, as we have seen at the beginning of this video, most altcoins tend to underperform Bitcoin most of the time. And so if you're not super bullish on crypto, if you think there is a chance that we just go sideways, potentially even going down, instead of betting on the Bitcoin price going down, it's a safer bet, in my opinion, to bet on altcoins doing worse, especially the altcoins that have a very strongly expanding supply, where say the early investors get the allocation, where maybe the team gets some vesting unlock, as there is a lot of altcoin supply in those short-term holders' hands and in the hands of people that want to exit because they had to hold, they were forced to hold. That's the point in time where we want to also bet on falling prices and make money, make alpha. This is why I like data so much, right? The crypto market is very transparent. We can see what various holders are doing and we can monetize that information. We don't have that information in other markets. Now have a look at this. This is the supply held by wallet size. So this is now an interesting indication of what the whales are doing versus the smaller holders. And we can see that the wallets that hold less than 1 BTC tend to hold more and more of the supply over time. But still, as a fraction of all of Bitcoin, it's not that much. Only 7% of all of Bitcoin is held by the quote-unquote shrimps. So if you've got less than 1 BTC, you are in the bottom 7% of all holders. If you have up to 10 Bitcoin, then you're still in the bottom 18% of holders. Bitcoin, as any other asset class, is very much dominated by the large holders, but again, they are not necessarily the ones that make the price movements. The price movements, again, are generated by the short-term holders. The split between the different wallet cohorts tends to be somewhat stable over time. And so this is then what happens during crypto summer and crypto winter. What we've got here is the realized cap hodl waves. So what kind of wallets realize their gains or their losses? That's as a proportion of all of the realized cap, again split up by the average holding length. And when we are in a crypto winter, it's only the long-term holders that are still trading BTC. They are the ones that simply dollar cost average into the market. That's the smart money. The not so smart money, right? The short-term tourists, they all get hyped up at peak prices. So those are the ones that get dumped on. Those are the ones that lose money because they enter when prices are high. They also exit when prices went down, and they're not buying when we are low. So let's take away those long-term holders. Let's just have a look at the short-term holders and you will see what I mean. If your investing horizon in Bitcoin is less than a year, then you are very likely among the people that lose with Bitcoin, unfortunately. The longer your time horizon is, the more likely you are to make money with Bitcoin. Because this is how this fundamentally works. People usually learn about Bitcoin or crypto in general when prices are going up, because that's when most people are very hyped about Bitcoin. That's when the news talk about Bitcoin. That's when the YouTube algorithm recommends crypto videos. But then the question is, what are you doing afterwards? Because usually you get those recommendations by the algorithm when prices are high, and then the market is very hot, and then we are likely crashing down. And if you then at that point in time sell, and if at that point in time you exit crypto, then you're simply just one of the masses that lose. What you should be doing instead is you should be learning more about crypto. You should stay around. It doesn't mean that you have to hold, but you should stay informed about crypto. So when nobody talks about crypto, when it's not anymore fashionable to talk about crypto, that's when you want to buy. You want to get into the market when all of those short-term tourists do not talk about BTC, when the YouTube algorithm is not talking about Bitcoin either. Currently, we are still comparatively hot. We are definitely not at bottom prices. We are definitely not at times where there is apathy in the market. This is where you want to get really, really risk on. That's when the Bitcoin price is around 16K and when it then goes up to more than 100K, or when it's at 3K and then goes up above 60K, or when it's at $200 and then goes up to 20K. Right? We always want to buy when this is low. We always want to sell when this is rather high. Isn't this very beautiful data, right? We don't see these things for any other asset class. We don't know how much speculative money is currently in the property market or in the precious metals market or in the stock market. But here with crypto, it's 100% transparent. And the only hard thing is to want those profits more than the average Joe. The average Joe just gets short-term interested. The not so average Joe continues to learn during the bear market and does not stop figuring out where potential bottoms and potential tops are. This is why channels like this exist, right? I make videos regularly over here. I publish at least one video a day, and I also do this during bear markets. And it's all about staying on board when most people quit. Here's another very similar chart. This looks at the ratio of long-term holders to short-term holders. And again, this is very nicely correlated with the Bitcoin price movements. When there are mainly short-term holders, so that's the red area, that's when we want to sell. When there are mainly long-term holders and not so many short-term holders, that's when we want to buy. And we could simply just take the middle here, right? 50. And maybe we want to be allocated to Bitcoin exactly to the degree as the long-term holders own BTC. So let's say we have 80% of our net worth, of our very risk-on net worth during times like this, and we only have 6% or even 5% of our risk on net worth in BTC during times like this, right? It doesn't have to be binary. We can manage this actively. We can just have an allocation according to how the long-term holders are investors. And when the long-term holders are out of the market, we want to be mainly out of the market as well. When the long-term holders add to the position and the dollar cost average in, we want to be in the market as well. For example, here, 70% in March of 2019. When BTC was at 3.7K, then went up to 10K, and then finally, of course, above 60K. And so one way would be to just split this up between very risk on and very risk off. When there's a lot of long-term holding, and risk off is when there's a lot of short-term holding. And then you can decide for yourself what you want to hold in case you want to be very much risk off. Do you want to hold long-term government bonds? Do you want to hold gold? Do you want to maybe use that money for a down payment on a property? Whatever floats your boat, right? It's all about being diversified. It's about buying something that is not correlated to crypto during times like this. Currently, we are pretty much balanced. So it's 57% in short-term holders' hands versus 43% in long-term holders' hands, with the long-term holder fraction rather going down. So we should still be taking profit according to that strategy and potentially allocate some of our Bitcoin holdings to, say, for example, gold. So it's not necessarily about trying to find the perfect entry and exit point. It's simply about risk management, right? How much allocation do we want to have to each asset class and to each kind of asset class, right? We want to be risk on when the risk to reward is great. We want to be risk off comparatively when the risk to reward isn't that great. And if we are somewhere in the middle, then probably we should also have somewhere average kinds of allocations. And now, isn't this here interesting? This shows us the net realized profit and loss breakdown by age. And again, it's rather the short-term holders that make all the fuss, that create those price movements. The long-term holders don't really do much. It's the short-term holders that realize all of that profit, and they then also realize all of the losses. And again, we want to buy when those short-term holders, or mainly the wallets between 6 months and 1 year, when they are giving up. That's the time when we want to enter. when FTX is collapsing and when Celsius is collapsing and Terra Luna and when there's only bad news. That's when we want to buy. And so this is how I write the macro picture, right? I don't try to draw random lines on charts and see here is a resistance, here's a support, etc. No, I just look at the people that tended to make money in the past, which is the long-term holders, and I look at their behavior. And things don't necessarily look that bullish right now. And again, I make money in this market by shorting all of those crap coins, by betting on falling prices of all of those stupid coins that have inflating supply. That's where I think the odds are in our favor. It's not about finding the needle in the haystack. It's not about buying Cardano or HBAR early. It's rather about betting on falling prices of Polkadot and of Ton and of Mantle and of Quant and all of those crap coins that have, again, expanding supply and that tend to do worse long term versus BTC. And so if you're willing to finally learn more, if you're willing to bet on falling prices to get the odds in your favor, then feel free to check out the premium membership of this channel. The link is down below. It's thebitcoinstrader.com. There's more than 100 tutorial videos in total in premium. Over the last 3 years, I've made on average 1.9% alpha per month over buying and holding Bitcoin. So if you want to learn more about this, feel free to check it out. It's currently $125 per month. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first 7 days and I will refund you 100%. There's really zero risk for you. If it's the first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you in premium. Cheers.